Last weekend, on a social gathering, one of my friends in USA who is in work visa like me, he said that he was sitting on $100,000 cash in his bank account. I was like, "Are you trying to buy a house or something soon?" He said no. It was just sitting there with no specific purpose, losing ground to inflation every day. I then took a liberty of suggesting to him a few ways to put it to better use. But I am not a very good speaker, and there were some other friends who suggested some other things. I normally do not like to override others in argument. I feel the more arguments you win, the more friends you lose. I would rather lose a not so significant argument than lose a friend. But I still want to put my point and suggest something to all legal immigrants like a friend who are sitting on cash and losing the value of the money over time. A lot of my friends are like that. They are pretty good at making money and saving money, but when it comes to putting that money to work, that's where they get stuck. How about you? Do you also have some cash sitting around because you just do not know what to do with it? It's definitely a good problem to have. I just think we can do even better. So here's what I recommend, and let me put a disclaimer. I'm not a certified financial planner, so please do your due diligence before you start investing. Point 1. Clear credit card debts. First thing first, if you have credit card debts, definitely use your cash to wipe that out. Credit card debts sucks the freedom out of your life, so no ifs, no buts and no ands. No sense in holding cash when you could use it to avoid paying sky high APRs on your credit cards. Point number 2, build an emergency fund. Once you have cleared your credit card debts, allocate your remaining cash to an emergency fund that could cover at least 6 months of bare bone living expenses. Some say 3 months of expense should be enough, but we Asian always like to go an extra mile. So I will suggest have at least 6 months of fund as emergency allocation. Here is one pro tip for you: where to keep your emergency fund. Move this money to an online high yield saving accounts, which is popularly called HYSA. Here are a few which I can recommend. Capital One 360, current rate is 4.3 APY. Marcus by Goldman Sachs, current rate is 4.4 API. Sophie, current rate is 4.6 API. Point number 3, save for big purchases. Do you want to buy a property, pay for a wedding, or take few months off to travel within the next few years or next 5 years? You will need cash for that, so move that money into a high yielding saving accounts as well, right next to your emergency fund. That's where in the meantime you are earning hundreds or thousands of dollars of passive interest income on your money, if not more. That's called cashing out, right? If you have watched this video till now, and if you think such contents will help you, to consider subscribing to our channel Desi in America, and also please share this video so that it reaches more audiences and more people will benefit. Now coming back to point number 4, that is investing. That is the most important message of this video. Most immigrants who work here in United States on visa are scared to invest. My friends, you can definitely invest and earn passive income on your investment. Your employee funded 401k is also giving you passive income, so go for it. After clearing your credit card debts, saving for the emergency funds and near future big purchases, if you still have leftover cash, then it's time to put that money to work. There's absolutely no sense in sitting on cash that you truly do not foresee a need for in the next 3 to 5 years. As a rule of thumb, any money that you need in the next 3 to 5 years or less should stay in your saving accounts, safe from market ups and downs. If you do not foresee a specific need for over next 5 years, those should get invested, starting with your retirement accounts. But Raju, what if the stock market goes down and I lose my money? I'm not suggesting to pick any stock and jump into the stock market. To be honest, I don't know what's going to happen to the stock market tomorrow, but here's what I definitely know to be true. Uninvested cash lost over 50% of its purchasing power in the past 30 years. The stock market, that is the S&P 500, has never lost money over any 16-year period. Between 1926 to 2017, the annual return for S&P 500 was 10.25%, well above the average inflation rate of 2.89 for the same period. Cash piled up in the bank account might make you feel safe and secure, but because of inflation, sitting on more than you need is simply not smart. In the pursuit of financial independence or freedom, sometimes playing it too safe can cost you the most. So if you are just beginning your investment journey, I strongly recommend you not to pick and choose the individual stocks and do not try to time the market. So many people delay starting the investment waiting for the perfect time in the market. However, timing the market is nearly impossible and waiting often leads to missed opportunities. So just invest in a fixed amount on the same day every month, rain or shine, and don't think about it too much. It saves a lot of mental energy that otherwise would have been wasted trying to predict market bottoms or tops. If you are new to investing, you should avoid investing large sum of money. Starting with a smaller amount helps you get used to the market volatility and learn the tips and tricks of investing. Rapid change in a large investment corpus can be overwhelming and lead to rash decisions like panic selling. Begin with an amount that feels comfortable and gradually increase your investment over time. You can start with as low as $100 to $500 per month. Discipline, consistency, and long-term horizon are the mantra for smart investing. Do not gamble in stock market. Always take educated and informed decisions. Instead of handpicking individual stocks as a beginner, I would recommend an automatic hands-off approach with low-cost index funds or ETFs, which can be set up in automatic mode. SIP or systematic investment plan is the way for safe retail investors like us. Fidelity or Vanguard's index funds and ETFs are always a good place to start. Just visit the website and create your own account. They are free. This is my first video on investing for foreigners in USA. If you are an immigrant and if you need some suggestion on how to start investing, do reach out to me. Please leave your comment on what funds you are trying to invest. Please note, I am not certified, but I am self-taught to meet my individual goals. This is in America's pump a lot to the US economy. It's now high time to make your money work for yourself. Till next time, Raju Shrestha signing off.